the Fed cut 50 basis points with unemployment at 4.1%. Now, if you think about this, back in 2000 during the dot-com bubble, which was the hottest economy I've ever seen in my lifetime, unemployment got down to 3.9%. So we're 0.2% above that, and they're cutting rates 50 basis points. It's insanity.
The bond market continues to have people scratching their heads. I'm your host, Andrew Brill. We'll talk about the bond market and what we can expect moving forward. And if you need help with your finances moving forward, head over to wealthion.com/free for a free, no obligation portfolio review. I'd like to welcome Jared Dillian back to Wealthion. Jared's an author whose most recent book is doing well. He's the publisher of the daily DirtNap newsletter, a podcaster, and has a bunch of other products to help you better your financial well-being. Jared, welcome back to Wealthion. Glad to have you.
Hey, thanks for having me. Thanks.
So Night Moves, tell me about it. How's it doing? And I know you were in New York just last week. And how's the book? There it is.
Yeah. The book is doing great. So if you don't know, Night Moves is a short story collection. It's literary fiction. It's 16 short stories about a whole different bunch of stuff. The reviews have been just incredible. The reviews have been off the charts. People love this book. It's kind of hard to generalize about it, say what it's about, because they're all different short stories. But I am a big consumer of short stories, always have been. I really, like the art form. And this is one of the best. It's actually ranked in Amazon above the best American short story series, and it has been for a month. So it's done really, really well. So highly recommend you check it out.
And you're going to give birth to another book, I understand, in the summer next year?
Yeah, I'm going to have an essay collection called Rule 62, which should come out next summer. Got to start working on that. But yep, lots of stuff.
Excellent. And I was reading your newsletter, and being a long-suffering Mets fan, Tungsten O'Doul, who you you had mentioned, and it was obviously an April Fool's joke. I remember back when I was a kid, and Sid Finch, Sports Illustrated got us all with Sid Finch way back when.
Amazing. That was the best April Fool's joke of all time. Yeah, he threw like 149 miles an hour or something like that. It was incredible.
Yeah. When guys are tipping the scales at about 104 now, 140, it had us Met fans on the edge of our seat, and it did fool us all. So it was a great article by Sports Illustrated. But let's get into it a little bit. Jared, what's your take on the economy right now? It's with all the economic data, the Fed's trying to get inflation under control, but it's kind of stuck doing well.
Yeah, the economy is not weak. I think the Fed's made a mistake. I think they saw a little bit of labor market weakness, and they confused that for overall economic weakness, which we don't have any. I've been flying all over the place the last couple of weeks. Airports are just insane, just full of people. Can't find a parking spot. The TSA lines are out the door. So we don't have a weak economy at all. And, just for perspective, the Fed cut 50 basis points with unemployment at 4.1%. Now, if you think about this, back in 2000 during the dot-com bubble, which was the hottest economy I've ever seen in my lifetime, unemployment got down to 3.9%. So we're 0.2% above that, and they're cutting rates 50 basis points. It's insanity. And all the economic data since then has been uniformly positive. It's been uniformly positive. Now, you could make the argument, you could say, okay, monetary policy was a little restrictive. Real rates were 2.5%. We have to get real rates down to 1%, and that's fine. But I think that inflation hasn't really gone away. People still have an inflationary psychology. If you've seen some of these labor negotiations with Boeing and the longshoremen and stuff like that, they're demanding just exorbitant pay increases to keep up with inflation. So that inflation expectations are grounded in people's minds. So, I think by doing this, I think by cutting rates 100 or 150 basis points, especially going into the election, I think they risk sparking off another wave of inflation. That's what I think.
So the next Fed meeting, as we know, is the day after Election Day. Any clue what you think? Is the Fed stuck? Have they backed themselves into a corner saying we need to continue the easing cycle? Or do you think they might look and see who, although I'm not sure that we're going to know who won the presidency the day after Election Day, but do you think that they're going to say, you know what, let's cool our jets and leave things where they are?
I think they'll cut 25. I mean, the thing is about the Fed as an institution is different from what it was 30 or 40 years ago. Like the Volcker Fed, I mean, if you go back and look at, a chart of the Fed funds target rate when Volcker was chair, the Fed would cut rates and hike rates, then cut rates and hike rates. Some people called Volcker the idiot in the shower, right? Because you're in the shower and you're like, too hot, too cold, too hot, too cold. And he was like there. So the Fed is different now. Like they get on a cycle, they get on a path, a predetermined path, and they cut or hike rates for a while. So they're on a rate cutting cycle. I think they think this is going to continue for a long time, like 6 months or a year. So I think they're going to cut rates after the election. I think they're going to cut in December. And by then they will have cut 100 basis points, and we'll see what happens in the new year. So
isn't there a risk of reigniting inflation, especially with the spending that's going on? You keep cutting rates, prices will go up, inflation will go up, the debt obviously is going to go up. I mean, it's all inflationary.
Well, the one thing that really stumped people about this, it's funny because I had a radio interview right around the time of the Fed meeting, and the interviewer was not really financially sophisticated, and she's like, well, the Fed is going to cut rates, which means mortgage rates should go down, right? And I'm like, actually, probably not. I think mortgage rates are going to go up. Because I was betting on a yield curve steepening. I was betting that the back end would actually sell off. And that did not compute. She's like, well, why would mortgage rates go up if the Fed is cutting rates? And a lot of people, 99.9% of people don't understand the yield curve. They don't understand transformations of the yield curve. So, the Fed cut was intended to be stimulative, but it's actually been the opposite of stimulative. It's actually been, restrictive because long rates are up about 0.5% at this point off the lows. So, and that's going to continue. And one thing I'm thinking about for the election, I'll just give you some insight as to my thoughts here. We have a debt problem, which is enormous. We have this enormous debt problem. And I think that if really no matter who gets elected, whether it's Trump or Kamala Harris, I think this could be like the Liz Truss moment in the UK, where the bond market totally misbehaves. You have rates gap up 50 or 100 basis points. The bond market vigilantes come back. You remember what happened when Liz Truss was elected in the United Kingdom. She was prime minister for like a week, and the bond market forced her out. The gilt market forced her out. So I think something similar could happen this time. I think the bond market could get totally disorderly around the election. It's going to be interesting.
So the yield curve at this point hasn't. It was inverted. It's kind of flattened out at this point, right? And so it's still not behaving. And it's very, very strange that they cut interest rates and mortgage rates go up, but the bond market hasn't done what everyone thought that would do either.
No. It's totally misbehaved, and I'm here for it. By the way, Stan Druckenmiller said that he shorted bonds the day of the Fed meeting. That's what he said. He shorted 30s the day of the Fed meeting. He says that short bonds is 20% of his portfolio and getting bigger. So yeah, I think that, to me, the 30-year bond when it was trading at 396, I think that was incredibly mispriced. 30-year money at less than 4% going into an election where you have two candidates where you're going to have mountains of issuance, like that didn't make any sense to me. So
the twos and tens are up higher than they should be also right now, right?
Yeah.
All right. Are bonds a decent investment right now? Is that something that you're looking at, the short term or the long term?
Well, they're better than they were a couple of weeks ago, but no, I think you're going to get tens out to 4.5, 4.6. I think you're going to get bonds out to 5%. So, if you're looking at 30-year bonds, you're probably looking in price terms at another 8 to 10% decline, probably about 8%. So, yeah, I mean, it's better than it was before the Fed meeting, but I wouldn't buy bonds with your money.
So the bond curve the yield curve is going to continue to be inverted if the tens are going to go above 4, and that means mortgage rates are going to continue to go up.
Yeah, which is kind of interesting. And the housing market, in spite of that, continues to do well. You really haven't had any pullbacks in price. Transaction volume is down. There's not as many transactions, but yeah, the housing market continues to be strong. I think it will continue to be strong. No matter what happens with rates, unless you get 10-year notes out to like 8% or something like that. But yeah.
So I want to talk to you about the debt a little bit and how it's just growing. It grows daily, and it doesn't seem like either candidate is really talking about it. It's interesting, Jared, because some people I talk to say, yeah, it's not a problem until it's a problem. We're not going to worry about it. But it could potentially be a problem as the debt grows and becomes a bigger part of our GDP, no?
It could be a problem overnight, right? Like you said, like a lot of things in finance, like nothing really matters until it matters. Like it's, you have these mispricings or distortions that continue for years, and it doesn't make any sense, but the trade continues to work, and then one day it just unwinds. And that's what I think is what's going to happen with the bond market around the election. Like, I really think you could have interest rates gap higher around the election. I'm actually going to be trading it election night. I'm going to be staying up all night trading. So
wow. So you think it's going to fluctuate that drastically in a very short period of time?
Yeah.
Yeah, and I want to mention that you mentioned in your in the Daily Dirt nap that you're going to be up at about midnight talking and doing some live stuff about what is going on and what is going on in the markets, aren't you?
Well, I mean, I don't plan on doing any live interviews or podcasts or anything, but I am going to send out a newsletter at midnight to talk about what I'm seeing on election night in the markets. So
if you want to subscribe to that newsletter, it's thedailydirtnap.com and hit subscribe.
Yeah, pretty much. Yeah.
All right, great. So I found it interesting, your evaluation process. You mentioned you look at charts and then you form a thesis. And can you explain to us how that works?
I don't know if I can explain it. It's all voodoo. I've looked like, I don't really consider myself to be a technician, because I think a technician is somebody who looks strictly at charts and doesn't really take in any other inputs. I'm a technician, but I take in fundamental inputs and sentiment inputs and stuff like that. But really, when I'm thinking about a trade, the first place I go is a chart. And the chart tells a story. And usually, when I actually, what's going on right now is in the other room, I have an assistant, he's pulling charts off of like 50 to 100 different securities and with technical studies on them and putting them in a PowerPoint document. So about twice or three times a week, I go through 50 to 100 charts. And if you just sit there and go through charts, like it begins to tell a story. It begins to tell like a macro story. So the story that it's telling me right now is, we've had a big backup in rates. We've had a big bounce in commodities, then sort of a retracement. Commodities are correcting a little bit. Stocks are unstoppable. One thing about stocks is that, I think you could have, I think you could have a meaningful pullback in stocks on election night. It just one of these classic sell the news events. People have said that the market is pricing in a Trump victory, which I think is true because he's ahead in the betting odds. And I think it's possible that we rally into the election and then, Trump becomes the winner at 9:00 on election night and the market is limit up. I think you sell the limit. And I think you'll have a 5 to 8% correction after that. So I think you'll have some sort of sell the news event after the election. And if Kamala Harris wins, I think it's bearish for the market anyway. So
they said that about Biden, and here we are years later, and the market's up.
Yeah, it's totally true. I don't want to get too much into politics. I think Kamala Harris is different from Biden. I think she's further left. I think she is less friendly to markets. Biden spent 4 years going around telling people he's like, I'm a capitalist, but, and he always would say the but at least he said, I am a capitalist. Like he said that. Like Kamala Harris has never said that. Like she has never worked in the private sector and she brags about that. She's like, I've never worked in the private sector, except recently she said she worked at McDonald's, but McDonald's has no record of her working there. So I still don't think she's worked in the private sector. So.
So along with evaluating, Jared, today you said something interesting about reputational profit. Explain to me what you mean by reputational profit, because I think I fall into that, whereas like, no, I think I can get more. But reputational profit, take reputational profit.
So really, if you are sort of a public figure in the markets and you make calls on stuff, you're a trader, but you're trading a different kind of capital. See, somebody who's a portfolio manager is trading actual capital, and somebody who is a pundit is trading reputational capital. Okay. And they're two very different things. And I would say actually trading reputational capital is harder because nobody likes to be wrong publicly. If you're a portfolio manager and if you have a trade go sideways and you close it out, the only person who knows about it is you, right? But if you make a call on something publicly and it goes wrong, then everybody knows, and you have all these people coming at you on Twitter and stuff like that. So it's actually much harder. So I often talk about this in the newsletter, the idea that you're trading actual capital or reputational capital. And, for example, I do want to talk about private equity a little bit. I've been a big private equity bear. I shorted Blackstone when it was around 120 or 130. Now it's at 170. I'm the biggest private equity bear in the world, and all the stocks just keep going up. Blackstone and KKR and Carlyle and TPG, like all these stocks just keep going up. And I am losing reputational capital. Like I look like an idiot because I'm the private equity bear, and it just keeps going up. So,
but your white paper.
By the way, if you want to check out more about the private equity trade, go to shortprivateequity.com. shortprivateequity.com. And if you go there, you'll see we have a Drudge style website of all different kinds of links taking you to bearish articles on private equity. And you can also get our free white paper. It's like a 20-page document, basically the whole thesis behind short private equity. So
I was going to say, you have a white paper out about private equity and what you feel is going to be its downfall, or at least a very, very large correction where people will get hurt financially.
Yeah, that might be next year. It might be 5 years from now. Who knows? But I think it's a huge bubble. So,
hi everyone, I'm one of your hosts here at Wealthion, Andrew Brill. In these weird economic times where the market is up, then it could go down. A lot of people calling for a correction. Some people think it's just going to keep going up. But if you need help being financially resilient, Head over to wealthion.com/free and we'll give you a free, no obligation. We don't expect anything from you. We'll just help you evaluate your portfolio and let you know what we can do to help. Again, head over to wealthion.com/free for a free, no obligation portfolio review and let us do the heavy lifting for you. So I want to, you had mentioned commodities a little bit, and I know that gold, you talk about gold a lot, but you also say you hate gold. So talk to me about gold and where you are sitting with gold.
Well, the reason why I say I hate gold is I say gold sucks, and it's because I've had a position in gold since like 2005, and it seems like anytime I would get excited about it in the newsletter, it would go down. And anytime I would get miserable about it, it would go up. So now, like, I just say gold sucks, I hate gold, and it just keeps going up, and it works, So I've stopped cheerleading it.
So you mentioned in your newsletter, you didn't know where it was. In January, it was at 1932. It's up over 40% since then. So not a bad investment. But yes, gold sucks. If that reverse psychology works, gold sucks, and it'll keep going, as you say, to about 3,000, right?
I think that's the next stop on the train is 3,000. So,
do you see resistance somewhere along the way?
I mean, the funny thing about trading a market when you're always at new all-time highs, like, it's very hard to project resistance. I mean, the obvious resistance is like big round numbers, I don't think there really is any resistance between now and 3,000. I mean, 3,000 is about 8% from here, 8 or 9%. We could get there by the election for sure, so.
And gold is a hedge against, I guess the market going up and down. So it's a sort of a safety net, right?
Well, the way I look at gold is it's an option on the possibility of future debt monetization. Okay. So if rates go up a lot and the U.S. government can't finance itself because rates went up so much, then the Fed will be asked to bring rates down by capping the yield curve. And that is going to cause gold to go just insanely parabolic. And we're getting closer to that day. That may happen soon. So I think that explains the 40% up year in gold. So,
Jared, what about other commodities? Are there any? You had said that commodities were stagnant. What else? What other commodities you're looking at? Obviously, there's oil, and that has puzzled me over the last few weeks anyway. But what other commodities do you think, or where do you think commodities are going?
Commodities are going up for sure. I'm super bullish. Oil in particular has been puzzling, like you said. I just saw a research piece on oil this morning, basically projecting that demand is at all-time highs. The Saudis are projecting lower demand. I don't understand it. You have this constant geopolitical risk, which is always present around Israel and Iran. Basically, oil is trading 70, 71 right now, and the reason we're down here is because I guess there was a headline that Netanyahu said that they wouldn't strike Iran's oil facilities. That to me seems insane. I think, of course, they're going to strike the oil facilities. I think they're trying to deke Iran and the whole world. The whole idea of the Israeli military actions is that they're a surprise. I don't think they would tell you in advance what they're going to do. So, I'm bullish because of geopolitics. I'm bullish because of demand. We'll see,
Yeah, eventually they're going to have to rebuild everything. Obviously, Gaza is going to have to rebuild. Ukraine is going to have to rebuild. And it's interesting what's going on in Ukraine right now with possible peace talks. But all these areas that have been decimated are going to have to rebuild, and they're going to need commodities to do that.
Yeah, especially copper. That's a big one. That's going to be a big one. I don't really have a view on copper at the moment, but yeah.
So Talk to me about earnings season. Anything that surprises you so far? Obviously, banks are still doing okay.
Yeah, I mean, I guess if you think the yield curve is going to steepen, which I do, then you want to be long banks. I don't want to say that I was surprised by the bank earnings, but I don't have a position in banks. I don't know. Like I haven't bought a bank stock since like 2010 or 11. They just I don't know. Like to me, the idea of making 10 or 15% on one of the big five money center banks like doesn't appeal to me. Like I think there's other opportunities out there. But yeah, I mean, it's been a great trade.
What are the sectors that you are looking at that you think are attractive at this point?
Well, I mean, if you're bullish on commodities, then you like energy and materials, right? So I think that's the obvious one. And I think, you've had a big outperformance in discretionary versus staples. I think that's going to reverse. I'd rather be long staples. I think healthcare has a lot of downside risk around the election. I think if Kamala Harris gets elected, you could see a massive correction in healthcare. I've been following the weight loss drugs in my newsletter for a few years now. We actually was really early on that because I started taking Ozempic like very early. And so I've been following that for a while. And gosh, I mean, if you still own Lilly or Eli Lilly or Novo Nordisk at this point, get the hell out. Like it is fully priced, and there is a lot of political pressure to get the price of these weight loss drugs down, and those profit margins are going to go down. So, and Eli Lilly is like, it's most of the index. So, yeah, I'm very, very cautious about healthcare stocks at this point.
What about tech? I know that you're as you put it, not too bullish on tech.
Well, I mean, if you look at big tech, if you look at like Meta and Google and Apple, like they're not super expensive stocks, like I have a tough time being super bearish on like the mega cap tech names. Nvidia trading 34 times sales, like sure, like that seems excessive to me. Some of these other semiconductor stocks like are definitely overpriced. I kind of don't have a feel for it. I really don't want to get involved. I think if you just bought energy and shorted tech and you just put it away for a year, you'd probably be pretty happy. But yeah, I don't have a position in tech.
You had mentioned that you're really staying away from equities, or you're nervous about equities at this point. Is that because of the election? Is that because everything's so inflated?
Well, it's just me. I'm kind of always nervous about equities. I'm not a bear. I'm not a stock market bear. I'm not one of these people that goes around saying we're going to crash. I just, it's kind of hard to explain. There's just a lot more interesting stuff to do out there. I don't like trading stocks because of the risk profile, because it's up on an escalator and down on an elevator, So I'm just, it's funny because, when I was at Lehman, I was in equities. I traded stocks and ETFs, and I just don't like it. I've never liked it. And I like trading fixed income and FX and commodities. Like it makes a lot more sense to me.
So you're sitting with your wife and your cats. You have a few friends over, and they say to you, Jared, you know what? Where am I putting my money to be safe right now? The volatility it's getting to me.
It's funny because people ask me for stock picks all the time, and I'm like, I can't help you because I don't even really trade stocks. But people think I'm like a stock market expert or something like that. Where would you go to be safe? I mean, look, like, I don't see money flooding out of money market funds because the Fed cut rates, I haven't really seen outflows out of money market funds. You're still getting 4.75%, 5% in a money market fund. That's still a good place to be. Even if it goes to 4.5 or 4, that's still a good place to be. I don't really see much likelihood that rates are going to 0 or 1 or 2%. So if you just want to sit out the election, you can just go to cash. Bonds are not safe. Stocks are, that's really the alternative,
Is there still a lot of cash sitting on the sidelines? I mean, Warren Buffett is sitting on piles, like he's sold off a bunch of stuff, sitting on piles of cash. Any inkling as to why that might be?
I think it's because the market's overvalued. He runs a giant money market fund out of Nebraska, right? Like it's this big Nebraska money market fund. And look, like Warren Buffett is kind of a vulture investor. Like he waits for things to get in distress and then he gets preferred stock with like an 8% coupon. And like, that's what he does. I think you'll see Warren Buffett get involved if we have a 10 or 20% correction. He sold most of his position in Apple. He says, look, Apple is fully valued and there's not a lot of innovation going on and what's the upside. And it's one of the greatest trades in the history of Berkshire Hathaway. So for sure, take profit. So,
but he held it for a long time before it got to that point. So obviously you can make a lot of money that way as well. Just buy it, hold it, and don't look at it all that much.
Yeah, and honestly, when he bought Apple, like I was very skeptical. Like Apple at the time was almost $1 trillion market cap, I think. And I was like, why is he buying the most expensive company in the world? Why is he buying a $1 trillion market cap company? Well, it went to 3+ trillion, so good for him.
And I apologize. I forget the name of your book, but it had something to do with not being nervous about your investments. And no worries. There you go. So it's thank you very much. So do you live that way, actually?
No, I actually do. I would say the one exception is I built a really big house and I have a big mortgage and doesn't really stress me out. Debt, what I said in the book was that the two sources of financial stress are debt and risk, right? And I don't really like any debt. I like to be debt free. So I have a little bit of debt on the house and I have a mortgage payment, and I don't want to say it stresses me out, but it causes me some consternation, and I'm in a big hurry to pay it off. I want to pay it off in like 3 to 5 years. So,
wow. So where can we find the rest of where can we find Jared Dillian? I know that it's thedailydirtnap.com. You can also find you at jareddillianmoney.com. Tell us about your podcast.
Well, the best place to go is Jared Dillian Money. That's where you can get like all of my products in one place. So the Daily Dirt Nap, Street Freak, Strategic Portfolio. You can sign up for the free letter. Highly recommend signing up for the free letter. It is free. And the podcast is called Be Smart, which I do with my friend Cameron, who's a great host. And we have a great conversation once a week. It's a really good podcast. I would say it's a very underrated podcast. So all of that stuff is at Jared Dillian Money.
It's very informative, and Cameron is also a writer, so he's working on some stuff.
Yeah,
himself.
we're both MFAs. We're both writing MFAs. So we kind of geek out on books and stuff like that. So
the rest of earnings season, what are we looking for? Anything in particular?
Honestly, I don't really pay attention to earnings. I don't. I'm more of a macro trader. I trade charts. I don't really pay attention to like equity fundamentals. I leave that to the strategists, when they're figuring out the S&P is trading at 26 times or whatever. Like it's not really what I do. But yeah.
When's the next book signing?
The next book signing is in Nashville on October 30th. And it's at a restaurant called Villa Castriati, and it is 4 to 6 p.m. It's being put on by Nesvik Trading. Actually, we're giving away books for free. They bought a bunch of books. We're going to give away books for free. So October 30th in Nashville at Villa Castriati.
So if you're in the Nashville area or you're traveling to Nashville, stop in and see Jared. He's always, and as you said, always happy to sit and talk to people about just about anything, whether it be investing or sports or that sort of thing. So, Jared, thanks so much for joining me, and I appreciate it. And we look forward to seeing you again soon.
All right. Thank you.
Thank you so much for watching our discussion here on Wealthion with Jared Dillian. Always a pleasure listening to his insights on the economy and markets. If you need help being financially resilient, please head over to wealthion.com/free for a free, no obligation financial review. And of course, if you could like and subscribe to the channel, we'd greatly appreciate it. Don't forget to turn on notifications so you know when we post new videos on the channel. And please do the social media thing with us. All the links are right below in the description. And if you like this content and are looking for more ways to achieve long-term wealth, watch this video next. Thanks again for watching. Until next time, stay informed, be empowered, and may your investments flourish.